The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Excuse me. Welcome to the October 20th fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means you and I can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. You can dial right now, 877-927-6648. Don't worry if you can't get to the phone. You can send me an email, just as Kay did a few minutes ago. And when you send me an email, up in that subject heading, please put radio show question. That way I'll be easy. It'll be easy for me to be able to pick out amongst the many emails that I seem to get, just like you do. So if you could do that, that'd be great. Of course, inside the Tiger's Den, well, any ping will do, Vasily. So, folks, let's go ahead and get this show started on fabulous and fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading up 130 points, 23,293. It was only just a few days ago. It was 23,000 was the number. Now you're 1.25% or so above that level. The S&P up $11, 25.72 is what she's printing at. Nasdaq 100 up 25, 61.17. Russell's up 8 points, about 0.6%. To the upside, semiconductors up 0.8 or nearly 10 points. Trannies are up 0.9%, 85 buckaroonies. You've got gold back $8, silver down 15 cents, light sweet crude up 14 pennies. Leading the charge, the upside, it is Intuitive Surgical up $13 or 3.5%. Priceline is up a little over 0.5%. That's $13. Athena Health up 9% or $11. Skechers, the shoe company, is up about 40%. Wowzer, up $9.57. To the downside, shoot, my system keeps changing. I can't tell you what it is to the downside out there. It is Freaky Friday on my computer. But all the data that I give you will be good and will be accurate. So let's go ahead and take a look at, let's go take a look at Kay's question. Kay writes in, and Kay is short the NQ. Can I give support and resistance on the NDX 30-minute and daily time frames? So let's go take a look at the NQ and provide that information to you and to her. I'm not just speaking to her as we speak. We're going to look at multiple time frames out, and we're going to take a look at the Qs from a couple of different factors. So some of you might say, well, why would Kay go ahead and take a short inside of the NQs out here? Well, let's go take a look at market profiles right now. So you've got a 30, a 60, a 240, a daily, and then the weekly time frame out here. Let's go from right to left. If we take a look at the weekly, what we know is that the NQs broke above a significant level of resistance. That's the top of its box, which was 6,004. It did it the week of October the 2nd out here. If we take a look at the daily, brand new TAS market profile that is formed, K. What you do not want to see today in holding this trade over the weekend, according to the daily chart, is going to be a close above 61.23 and change out there. So let's just say if you take out the high of 2 days ago, it's not advisable to go ahead and keep that short. I know you're short at 61.23, so that in itself is a beautiful thing. You just really don't want it to close above that area. And then because you're above a brand new bearish structured NQ daily box out here. And that would just simply tell you, as yesterday did, how super strong these markets are. With regard to market profiles on the 240 and 60, they're pretty much irrelevant at this moment. 60.97 on the 240, 61.06 is the top of the box. You're above that. That would, in essence, become your support area. There is no resistance other than the high from a couple of days ago. Well, the 30-minute here, you've got kind of a bullish, not kind of, you have a bullish structured box that says that price could easily get up to 61.25. So make 61.25 or 61.27 your go, no go range out there. Now, you might say, well, let's take a look at some other things inside the cues to pay attention to out here. Because if I pose the question to you, this new daily box that's out here, is the NQ going to be able to bust through it? The answer I would provide to you is yes, absolutely, positively, not even a question in my mind. So it's really a question of timing. Of course, you might say, well, come on, Steve-O, how can you possibly have that much conviction to be able to answer that question? And that is good. That's a good question, and it is because of this chart right here. You and I have been taking a look at for a number of days the mere fact that the equal-weighted ETF, that's the top portion of our screen, was not confirming higher highs that we were seeing inside of the QQQ series ETF. Well, guess what? That all went away today. Now, this is a end-of-day chart, so I don't know what is going to occur between now and then. But I don't see anything out here that says market's going to sell off. North Korea could shoot off some kind of missile. Anything could happen. But as we speak right now, the daily equal-weighted version for the Qs out here is at a new all-time high. And if there's one thing I do know, which is not much, but if there's one thing that I do know is when the equal weight is leading the way, it's really telling you the truth. Just like it was telling us that we were going to see a pullback. Turned out that was just simply in one sense, if we take a look at the cash indice, that was a 45-minute wonder. It wasn't even a one-day wonder out here. And so it worked, sort of. But now we've got to take a look at the information we have today. You're at a new all-time high inside the QQEW. We are going to get it. NQ is going to be able to take those levels out. I'm not saying it's today. Not saying that it's Sunday night or that it's Monday, but it is going to occur out here. Inside the S&P 500, we have the same setup because we were watching both of these. The RSP, that's the equal-weighted version. In fact, I just need to get rid of that because that is no longer a divergence that is out here. And I can get rid of this. You can see we're at new all-time highs here. So the message of the equal-weighted version of the S&P 500, RSP, at new all-time highs says that the S&P is going to continue to go to higher ground. Now, if there was one chart, the only chart that I can provide to you, other than those profiles, Kay, that says maybe not so fast, maybe there's some type of pullback, maybe it's to the bottom of that new daily profile, is when we take a look at, there's also one last divergent pattern when you take a look at the NDX 100, when you take a look at the Qs, and that's the chart pattern of Apple. When we get back from this break, we'll go take a look at this chart, which shows that Apple has not taken out its all-time high. So there's a divergence there. Typically, those divergences mean something. Maybe this time's different. Steve Rhodes, TFNN.
Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we're throwing out the kitchen sink here for Kay, who is short the NQs, and just giving her information to think about. Now, we were taking, like, just as we're going to break, I was popping this chart up on our screen, which is a chart of Apple and the chart of the NASDAQ 100 at the very bottom portion of our screen. When we see divergences, right, you and I were looking at divergences inside of the equal weighted versus the weighted ETFs. They were signaling to us we were going to see some type of retracement. We saw that. That was yesterday. That was it. End of story. Done deal. That's gone. Sayonara. Adios. That's really what the charts now show inside the equal weighted. You know, that was a one-day wonder, so to speak, and not even then. Well, in the case of Apple and the NDX 100 as well, we know that the NDX has been making higher highs. Bottom panel of my screen, you can see just simply diagonal pricing, and we have seen that Apple, on a closing basis, has been making lower highs out here. But just as we saw, this is the caveat. Here you can see some other examples, and in fact, it's good to talk about the previous example where Apple was making higher highs. That, in essence, was into the time frame of about August the 16th out here, and the NDX 100 was making lower highs. Okay, so we actually that's not the one that we wanted. Here, that's actually, let's skip that. That was a total brain contusion out here. I guess the point that I was really trying to make, that I want to make to you, is just as we had the one-hit wonder yesterday in the equal weighted, that might have been the deal. That might have been the extent. And so the fact that we have this divergence in lower highs inside of Apple, that's already perhaps played out inside of the NDX 100. It happens at the bottom as well. Yes, Jay says crash is over. Crash and burn is over out here. I mean, if there is anything that the market proved to us yesterday, it was no head fake. So just be careful with the trades. You've got your parameters, what to take a look at. You're in at a short at a good price. There's no reason for you to let that thing run above your entry price by more than just a few points out there. Okie dokie. So we had a question from James. James says, hey, Steve, thanks for your advice. What do you think of LRCX? Let's go to our triple play out here. LRCX at Lamb Research, LRCX out here. We can take a look at, Lamb Research. We can look at daily, weekly, and monthly charts, market profiles, a whole bit. You can see you're up at new all-time highs. You're up above all kinds of profiles out here, looking to go long for a midterm time frame. That boat has sailed. Let me go over to my other chart, see if there's anything else out here that I can see for you. The LRCX out here on a daily basis. Man, oh man. No, the only thing that I could suggest to you, and you've done the research on this chart, so I don't show any resistance to suggest that price would pull back. Now, coming back and testing my red line happens all the time. And in the case of Lamb Research, it's not doing it today, but it most certainly did it yesterday, the day before, almost in essence the day before that. So if you're looking for a momentum play, I would say wait till you see the next test of Stevie's red line. Right now it's priced at 197.18. Monday it's going to be something else. I would give you that as a potential play with regard to Lamb Research. That's the daily. Let me see what the weekly here is showing, just in case there's any kind of, it's moving higher, doing less relative energy, but until the bears show up there, that doesn't mean anything. So that's all that I've got you. I have for you. I'll get it out on Lamb Research. Oh, that's, you even said Lamb Research. I should have just seen that. Okay, so that was for James. There was a question inside the den from Dano. Dano wants to take a look at the SMH out here. So let's go take a look at it. We'll do the same thing. We'll do the same setup. And we take a look at the semiconductor ETF. What we can see is a brand new profile formed today. Now, this is extremely bullish, the way that this profile formed and where price is trading. That's the left panel of my screen. I'll go ahead and open it up for you. So you're going to see today a brand new profile. That profile, by the way, has a bullish structure to it. Bullish structure from the standpoint that the center of the box closer to the bottom versus the top. But price has been trading above all day the top of that brand new profile. That is called super bullish, extremely super bullish out there. It would be a gift, Dano, if price were to pull back into the bottom of that box at 96.33. So we're looking at it. What did you want to look at specifically? But take that message with you with regard to what the semiconductor ETF is doing. If I put out this chart here, where we take a look at, whether it's time to mark counts, we look at Stevie's red line, we take a look at a number of different things out here. I don't see anything. If we did some wave counts, we can do some wave counts on this, see where the heck we're at. We blew past the G today, the seventh wave out there, so that's kind of recycled, and maybe you're in wave number 4, but it looks very bullish. It looks very bullish on the daily. If we take a look at the weekly out here, also looks bullish, very much like Lamb Research. Weekly prices stretched a little bit, moving higher, less relative energy. It's only a potential pattern out here, nothing necessarily to be too worried about. So the SMH semiconductors look very good. That takes care of all of the questions. So let's go take a look at, I think that it does. Let's go take a look at some of the normal things that we look at out here, gold, the yen, things of that sort. So let's pull those charts up on our screen. Let's take a look at Goldilocks. Let's start off with, what's the yen doing? I hear that question. Hey, Steve-O, how's your yen? If we take a look at the yen, you're going to see wide-ranging bar today, moving to the downside, testing or trying to get back to the hammer candle. That hammer candle form on October the 6th. You know what they say when you take out the low of a hammer candle, which has not done yet. That's 88.28. You're at 88.36. It says if you're long, you're wrong out here. So we don't know. There's support, no question. There's support. Hasn't totally tested it. I don't think it has. Let me see. What's the low today? 8826. What's the low of the hammer candle? 8828. Okay, so it is being tested. Has been tested. Watch at 88.26 for those of you that care to watch that level. But what is the yen really doing? We identified this, you and I. You developed this consolidation, this rectangular consolidation. You said, hey, Steve, how about that rectangle consolidation inside of the Japanese yen? Does that mean anything? And it does. means that this thing has been in this rectangle consolidation since March of this year. So fairly decent time frame out here. We have no idea whether this consolidation will be broken. If it does, it spells curtains to the downside. If it holds, then what you ought to see gold find a bottom. You ought to see treasury bonds find a bottom. Why? I don't know. What I do know is how correlated these are, and that is the meaning until we start to see that correlation disappear. And it doesn't look like that's happening any time soon. So what does this mean? You take out the low of the hammer candle, you should find support at the bottom of the consolidation. If it goes down and tests that bottom of the consolidation, what is that going to do to bonds? What is that going to do to gold? Good question. Let's answer that when we come back from the break. Dow's up 132, S&P's up 11. If you'd like me to help you with whatever you're looking at, you can send me an email, steve@tfnn.com. Put in that subject line, radio show question.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Up 135, S&P is up 11. Before we went to break, we were taking a look at gold. In essence, we're really looking at the yen, which means we were looking at gold. You'll see that gold is down about $10 as we speak right now. So just following in the footstep of the direction of the yen out here. Gold, it looks like to me, it's headed back to its previous swing point low. That's from the trading session out here of October the 6th. The descent in gold all depends upon how quickly the yen gets down to the bottom of that consolidation. If the yen takes out the hammer, it really confirms for you and I that price is going to go down to the bottom of that consolidation. If it holds, then I don't know. Then it might not, right? The hammer candle is a very strong candle session. But what we do know is when you close below it, that support has vanished, gone, vamos, adios. So you want to pay attention to that, especially if you're trading gold, or Michael, who wants us to take a look at dust. I would think that you would want to take a look at that as well, because the miners typically are following the direction of gold. Not always, but typically following the direction of gold. So what we know right now is gold should head back to the October 6th swing point out there. If it takes out that low, which is 1262.80, then what we're going to see is a move down to about the 1208, maybe even further than that. Now, with regard to gold, the other areas that have to be paid attention to, you don't have to, but I'd suggest that you do it, would be the following areas. You'd be paying attention to 1275.60 on it, and really then, because that would then tell you're headed to 1261.70. 1261.70 is going to be a very important low. That's the weekly bottom of its bullish profiled box. If you close below that, then that A to B equals CD pattern that we looked at, that becomes the target area. So you got to really put those pieces of the puzzle together. Now back to Michael's question, which was asking, can we take a look at dust? He owns dust. Just looking for an opinion on that. And so let's go take a look at dust. Well, there we go. Let's take a look. No, that's not what I was looking at. Oh, I know. It was back here on this page. First thing I want to do, Michael, is look at the GDX, right? We go look at dust, and I will, and I'll give you, some information on that. But really, because in essence, it's trading off of the GDX, I just prefer to look at the underlying instrument, so to speak. That way we're not caught up into whatever the differences of the triples and so forth. Speaking of triples, hey, what are you guys doing tonight? Good baseball game on. Right, you got Game 6, Yankees, Houston. You got Verlander on the mound out here. Sounds to me like pretty good odds we're going to get to a Game 7, which is always a fun thing during this time of the year. So we'll see, because Mr. October, when it comes to having that ball in hand, that would be your pitcher in mind, Verlander. Now, with regard to the GDX, here's what we know right now. You can see a nice little rising trend line, Michael. That's coming off of the low out here from December 20th, 2016. Your next touch point is basically July 7th or July the 10th out here. Price, if gold's going to head lower, the miners ought to head lower, and that's where price ought to head to. Now, at that rising trend line happens to be the bottom of a weekly profile, 2233. Now, we're not there yet. So I'm just trying to give you, sounds to me like you want my opinion, and I don't see anything that says gold or the miners should bottom right now, right? So we've got that in play. And so what you're going to be really watching inside of GDX, in my opinion, is 2292. In order for you to maintain that long position, you want to pay attention to the yen. Is it down to the bottom of that consolidation, giving you a bullish reversal signal? Tighten up your stop. If not, second option, breaks through the consolidation pattern, then you're in good shape out here. The daily profile level to pay attention to is 2292. That's what you want to see the GDX get below. That will improve your movement inside of the dust trade out here. Today's volume is 15 million shares. Today is coming into a swing point from October 2nd that had 47 million shares. So I'm going to give you the good news and the bad news. That's the bad news, because the GDX is moving lower with light volume. The high of that session is 2316. The low of today's session is 2311. You're trading at 2318. That qualifies as a test and a rejection of that area, Michael. Doesn't tell you long term, but it just tells you not likely to bust it out today. You certainly would like to see it close inside there, meaning below the price point of 2316. Because even when you close inside a swing point on light volume, chances are you're going to go down and test that area. Now, if we put up dust on our screen out here, just so I can try to give you some of its parameters, really profiles and so forth, this would be going to the, whoa, now that's a bummer. I don't know about you. I can't read that. I know how to fix it, though. Where is it? Well, I think I know how to fix it. There we go. Okay, fixed. Whew. Yeah, that was a trip, wasn't it? Just, in like 2 seconds, you move that cursor in the wrong direction, and then boom. Boom. So in the case of dust out here, it's got the left side on. Let's not show the left side. There we go. So what we're looking at here, the swing point, October 2nd, right? The low inside of dust is 25.20. The high today is 25.21. There's your test. Today's volume, 4 million shares. So far, the October 2nd volume, 6 million shares. Now, it might do 6 million shares. The problem is, these triples, I really believe, Michael, that you've got to focus more on the message coming out of GDX. Nonetheless, your level of resistance, nothing inside this. If we didn't know better, and we just simply carte blanche went ahead and used the market profiles, this says, hey, guess what? You're inside a bullish structured type box out here, and it ought to get up to about 26.05. So, Michael, I hope that helps you out. Have a great weekend. Thanks for writing in all of those things out here. I'm going to take another quick peek, see if anybody else has got a request. We want to get to all requests out here. I don't see one. I got the request from the walk-in bathtub quotes. Never asked them. Never even Googled, searched for walk-in bathtubs. How do I get on these lists? How do you get on these lists out here? Does anybody know an app where we can just folks just like you are the only ones that absolutely get through? We could probably make gazillions out there, so that we don't have to say, hey, send me an email. Just make sure you put radio show question inside that subject heading so that I know it's coming from a valid, user out there. In any event, I don't know how I got off on that tangent. Oh, I know. Walk in the bathtub quotes. Are you what? Here's the next one out here. Sleep research news. Now, it's not that I don't need some sleep research news. Okay, they read my mind there. But how did that even? I never search on sleep research. Steve, do I have any analysis on Bitcoin? I don't, Danny. I don't even know. I think there's one ETF or so forth that I can see off of our normal exchanges, right? So I don't have anything through my normal systems here for us to go take a look at charts in order for you and I to be able to do any kind of analysis of Bitcoin, try to look for market profiles, things of that sort. So you just have to go to those cryptocurrency sites, in order to be able to see that. When they do put that in here through, some type of exchange, then we can go take a look at it like any other normal instrument out there. And that would be a beautiful thing. Dow's up 142, S&P's up 12, NASDAQ 100 up 27 points a Rooney. 0 TFNN.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we're going to go take a look at natural gas. We're going to look at the November contract. We're doing that for Bob inside the Tiger's Den. Bob wants to take a look at UNG, which is the United Natural Gas ETF out there. So it's really the underlying instrument that's going to assist us. We're going to look at the market profiles. That's one of the things we're going to look at. We've got the 60, the 240, the daily, and the weekly profiles out here. On the weekly basis, we're down below the bottom of its box, which is $3.03. That's never really a good thing out here. On the daily, we're down below the bottom of its box, which is $2.96. We can see that over the course of the last couple of weeks out here, we've seen price rally, and it has been thwarted, if that is a word out there, at around the $3 even Steven mark. That on the daily basis is the center of the box out here. So you would expect or anticipate that that would be a level of resistance that would be tested again. Now, it looks like to me price is trying to figure out how to make that test occur. We say that because on the 4-hour chart, 240 minutes, price is trading now above the daily box out there. As long as price, Bob, stays above 290, then that says you've broken through a resistance. It's 292 in essence on the 60-minute time frame. If you can clear those two short-term resistance points, then price ought to Sunday night, Monday, something along those lines, start to try to make another run for the previous high from a few days ago, $3 and slightly above that. That would be my reading. Now, to give you a likelihood that that outcome would occur would be if, in fact, natural gas today finishes above Stevie's red line. Stevie's red line is $2.92 is what we're going to call it. So we kind of took a look at that somewhere as well, just using a different set of tools, but we were able to identify some resistance. If it doesn't close above that, then you don't have that confirmation message just yet. I don't care what those short-term 30 and 240 or 60 and 240 minutes do. Now we're back to the daily chart. We're back to Stevie's red line, and you'll see that the price oscillator is down below zero. Never a good thing. When you're down below zero, you come up and you test the red line and you reject it. It says, I still want to fall out here. What happens when you close above it? Counter trend rallies in place. Where does it take you to? It takes you at least back to where you previously were, and that is about the $3 area. Now, what does that mean for UNG? I don't know. You've really got to be focused on, I don't know what the length of time it is that you're trading. You've really got to be focused on what the underlying contract is doing. And I don't know when this thing rolls out here, or I don't even know if the UNG has more than one contract in it. Does anybody know out there what the UNG has inside it? Because it probably is more than just simply, there's no reason. I'll see if I can find anything out here. ETF holdings. because they never really want to make it easy for you. Let's see if this shows me. Yeah. So, so Bob, what we have to do is we have to take a look at both the December and the November contract. In fact, and December is larger weighting. So let's go take a look at it. The weighting is it's a little over 2 to 1, probably about 2.5 to 1 with regard to the values inside of that. So it makes, you got to pay attention now to 2 futures contracts in order to really trade the UNG and get anything of materiality out of what the UNG is showing you. If we take a look at the December contract out here, let's go see what its profile information has in store for us, see what it's doing. But here's, I can't put the December contract on my other system. I have to add that instrument. It's not out there, so we won't do that. But you're going to see similar things, right? 60 and 240, you're above resistance. In this case here, since December is basically 2.5 times to 1, we can see that where price is running into resistance is the bottom of its daily box. So 319 in essence is the price point. If you were to ever see price close above 319, you're back inside the weekly box, you're back over the bottom of the daily box inside of the December contract, and then things can start to run to the upside. So I hope that that helps you out. If nothing else, at least to know that what 2 contracts are inside of that ETF, so that if you're going to trade it, you're going to focus on those 2 contracts, and then you're going to try to put a mathematical weighting on each just to give you an idea as to what is going on out there. Okay, quick peek in on the email side here, see if we've got anything added to the walk-in tub emails, and we don't. I don't think there's anything longer. I don't think there's anything else inside the Tiger's Den that we were asked to look at. If so, just repost it for me, and I'll be happy to go take a look at it. So what do we want to do here for the next 3 minutes or so? Let's take a look at some of these equities that are popping to both sides. Let's look at the downside. Celgene down about 10% or 13 bucks, gapping down with volume. Where's it gapping down to? Let's go put this into a weekly time frame out here, try to get a little bit better perspective. So the last time that this thing broke out was back here. You can see the wide-ranging bar. You can see the accelerated volume. That accelerated volume was 52 million shares. You're at 36 million shares as we speak. So you're pulling back, in essence, into a sign of strength there. There's a sign of strength out here on June 19th. 39 million. So you're about the similar type of volume here. So with regard to where is Celgene headed to, you can take a little trend line, most certainly, see what the trend line is doing. You're breaking below that. Okay, says you want to go lower. You're below profiles out here. So very likely where Celgene is headed to is about the 113.63 level. Could easily head back all the way down to the breakout from, in essence, October 24, 2016 at about 96.93. So it's breaking a trend line. It's doing it with volume out here. That is the weekly chart that we're taking a look at for ticker symbol CELG. If we go take a look at Regeneron Pharmaceuticals, down 11 bucks as well. What is it doing? Well, let's just stay with the weekly chart since it is the end of the week. Last time that price was down in this area was all the way back on September 18th, all the way back. How about that? That was a month ago. 3.2 million shares. You're down there with about 2.9 today, so similar type volume. You are going to, looks like, close below the bottom of a daily and weekly profile out here, so that is not necessarily good. Quick little trend line inside of Regeneron Pharmaceuticals. Probably, well, yeah, that would be it. So price could easily fall down, in essence, into the trend line, into about the 390-ish type range out here. That is Regeneron Pharmaceuticals. Let's take a look at Bio. Well, let's get it out of the, the IBB must be pulling back. I don't see it up here, but, this is the week. The weekly time frame for Biogen doesn't look bad at all. Yeah. It's just run into this wall of panic, this wall of sellers out here. These are the folks that bought during the week of July 20th, 2015, somewhere between a price level of 379 to 276. There were 29 million shares that traded hands there. Those people that bought at those prices, when price got down in the 220s, were saying, what in the Sam heck did I do? And if price ever gets back up here, I just want my cash, right? We know the psychology of traders out there. We've all been there. We've all done that. Might not be the right thing to do, but we've done it. I've done it. Just speaking for myself. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So while we were at break, I checked on my phone. I was complaining about the emails that come through on this thing out here. I mean, where these things come from. Most of the time, I shake my head and cannot figure it out. Right now, maybe maybe you don't even have to type anything in. Maybe you just have to visually see something, and then you attract it into your life. So I must have seen one of those walk-in tubs. You see them all the time on those darn commercials. At least they're down here in Florida. Maybe our average age group is just a tad higher than other parts of the country out here. But just during a break, the prior break out there. One of our dinners or somebody was talking about where might have been Maria by Thanksgiving, the Dow maybe getting up to 26,000 or something like that, and just kind of have fun, be facetious out there. So, hey, Santa's workers don't report in until next week, kind of like the NFL thing. In any event out here, but I specifically said, Santa, and the last email that just came in is Santa's official letters. So I don't know. I don't know how that works. I am now, just so you know, to test this theory out, I'm going to say Powerball winning numbers. All right, so I'm going to see if maybe, just maybe, that's the next email that comes in. If so, we'll just spread it around, because I couldn't make it happen without you. So what's the worst thing that we're taking a look at inside of these markets that just doesn't make sense to Steve-O out here or to you? It's still the fact that we have a rising bottoms spot volatility index, bottom portion of my screen, in the face of rising prices out here. This chart is done based on closing prices. So because it's based on closing price of the S&P 500, it's not going to show that there was any kind of correction yesterday, albeit just simply mostly in the futures market between 2 and 10:15, 2 in the morning and 10:15. No, was it 10? Yeah, about 10:15 in the morning when the market, 10:13, I think, when it really started coming back. So this is one of the things that still remains out here that I scratch my head. And the reason I scratch my head is because this has always led to some type of pullback. I know, this time it's different. Hey, stay tuned, folks. Your favorite polar bear, speaking of Santa's helpers. Your favorite polar bear and mine, David White's up next. Hey, I won't be here on Monday, but I'll be back with you on Tuesday. Have a great weekend.